Hey everybody, Stephen Alt here. I'm here with Parker. And Parker, why don't you go ahead and introduce yourself?
Hi everybody. My name is Parker Borofsky, and I am a branch leader and senior mortgage loan originator for Movement Mortgage, and really excited to be able to share some great info with you guys today to help you with your home purchasing and investment needs.
Appreciate that. Yeah. And what I'd like to start with today, Parker, is maybe distinguishing or explaining the differences between, say, a second home or an investment property, maybe some of the differences or the advantages of each one.
Absolutely. The second home and investment, they can be very different, or they can kind of actually go hand in hand, which is pretty cool. So my team and I really specialize specifically in these two types of purchases. So when you're talking about investment property, people think about all sorts of different endeavors. So you've got long-term rentals. That's probably the one most people are familiar with. Um, duplexes, multifamily, so forth. So long-term rentals are definitely always going to be investment. That's where you're not going to personally use it yourself. You're purchasing it as a vehicle to earn income, and that's it. That's an investment property. A second home property, also known as vacation home, is somewhere that you're purchasing to enjoy for yourself some portion of the year. Beach, mountain, wherever that may be. What's cool though is that sometimes a second home can serve both purposes. So you can purchase a second home with the intention to use it yourself, but obviously you may not have, you may be going once or twice a year, a couple weeks out of the year or longer, but the rest of that year when you're not using it, you can actually also rent that out and earn income. So you can get the best of both worlds. So the main difference between the two is just your intention and if you're going to use it, or if you're strictly purchasing it for income purposes.
Right, which comes into play here in Florida, right, where we have a lot of like snowbirds, if you will, that come down for the wintertime and then go back home in the summer. And this way they can kind of maximize that investment themselves by being able to rent that out.
Absolutely. Absolutely. And some people ask, is there is there a required amount of time to spend? Technically, no, there's no guideline amount of time that you have to spend this many days. I tell people it's kind of the common sense method. So if you're purchasing this property and you truly intend to use it yourself, whenever you can get down there, for some people, that may be a few weekends a year. For some people, it may be a week or two. And for others, it may be a few months. Um, but as long as you're purchasing that with the intention of enjoying it yourself, there's no guideline number of days that you're required to be there.
Yeah, that's a great thing to keep in mind for sure. I know we have a property very similar to that as well. So explain to me a little bit about how the FHFA, the changes and how that kind of affected the second homes and investments.
Yeah, so the FHFA with all of this kind of kicked in last year.
Mhm.
Um, I don't know if they caught on to people being able to purchase these second homes, because second homes used to be pretty much the same interest rate as primary homes.
Right.
Um, and so I don't know if they caught on to that, or if it was something that was just planned anyway because people were just buying so many of them and they had to slow it down. But essentially what they did is they changed the interest rate adjustments for second homes. Now they're the same as investment occupancy has always been. So, investment rates were always higher than primary home rates, and now second home rates are the same exact adjustments as the investment loans. But you can still do the benefit still to purchasing as a second home, if you're going to utilize it that way, is that you can do 10% down as a minimum down payment for the conventional Fannie Freddie program. And investment occupancy is a minimum 15% down if you're using the Fannie Freddie conventional loan program.
Right. That's definitely good to know. I know I'm working with a couple buyers right now that are looking, for an investment property or a second home, and having that knowledge to understand the difference between the two really can be make or break for some people depending on what they're looking at, especially price point wise. Um, I'd like to kind of change gears a little bit, and maybe we can go into the types of loans that we use or what are available for them to use now.
Yeah, absolutely. So probably the biggest factor is going to be purchase price and loan amount. So for your most straightforward 30-year fixed, traditionally the better terms, not always, but traditionally, that's going to be your conventional loan that falls under the Fannie Mae or Freddie Mac guidelines. So that's one option. Now, currently that max loan amount is set at $726,200, meaning in order to qualify for that program, that's where that loan amount would have to be there or under. In most counties, there's a few counties with higher limits based on living. So surprisingly though, Florida only has one county that allows higher limits. I don't understand that. I mean, that's in the Key West area.
Yeah.
The limits are higher there, but it really kind of, I'm surprised because there's so much coastal real estate and pockets that I feel like the housing averages higher. So I'm not exactly sure why Florida doesn't have more, but anyhow. So yeah, so if it fits in that bucket, then that's your conventional Fannie Freddie loan. If the purchase price and loan amount is going to be higher, that's when we start looking at jumbo loans. So jumbo loans are going to be they're unique because there's no one big entity that all these jumbo loans go to. So like Fannie and Freddie, it's one set of guidelines. For these jumbo loans, it depends on the investor that's being used for the loan. So some have more flexible terms than others. So you've got the conventional loans, the jumbo loans, and then if for some reason you don't fit in either of those, or if you're adamant about doing something in an LLC, then you could look at commercial products, or if you're having a debt to income ratio challenge, there's always what they call the DSCR loan, debt service coverage ratio. I always get those backwards.
Yeah.
That loan product's unique because it only looks at the income of the property versus the payments, and then your credit score and cash, but it doesn't care about the rest of your debt to income ratio. So it's great for those who really need it, but most people I've found, 8 out of 10 that come to me thinking they need a DSCR loan, don't. We have other ways around that because the DSCR loan, it's a much riskier product. So because of that, the interest rate's higher, down payment requirements usually higher because it's so risky. So those are the basic loan products. Now, what I will say when I was talking about that workaround, so sometimes people with debt to income ratio, if they're close to being over on that debt to income ratio, or just over, a lot of times we can also use projected rental income if they're purchasing as investment occupancy. So sometimes that's all that's needed versus going full portfolio DSCR.
Yeah. Awesome. Yeah. So it's really great to know all the different options that you have out there available to purchasing property for sure. So can you talk a little bit about and how that relates to taxes and the tax implications or tax benefits thereof in purchasing down here?
Yeah, I can speak to some of it. I'm not a CPA.
Right.
I can only attest to what I've seen, what I know personally. But yeah, and this is where actually finding a CPA who has a strong knowledge of rental income and how this all fits is very important. So some questions that folks may want to ask or make sure. So a few things from a lending perspective. So Schedule E rental income is going to be the best place for lending for you to file your rental income. I have found that probably 92-93% of the time, that's where CPAs will put it anyhow. So most of the time it's fine. On occasion though, I've seen CPAs, older school CPAs that maybe aren't as into real estate. I think they still have to put short-term rental income on a Schedule C. But a lot of times when clients have gone back and questioned that, they've been able to get them to put it on rental Schedule E. The problem with a CPA putting that on a Schedule C for a client is then instead of being viewed as rental income, which we have a lot more flexibility in how we account for that.
Yeah.
On a Schedule C, it's now self-employment income and not rental income. And self-employment, that's a whole nother, so many more requirements on that to use
Right.
it, and less of it, there's not as many categories we can add back in. So that's why it's really important, especially right now in tax season, for people to make sure that that's being put into things. Now, I can't speak for the IRS or CPAs and where it's supposed to go, but I know what I
Right.
see, and I
Yeah.
can say being put on Schedule E is really important. Or if it's like a partnership or S corp returns too, those are fun. We have ways to adjust for that as well. So
Right. Right.
yeah.
Absolutely. I know we had talked previously a little bit about like rental income on business returns, and we talked about the Form 8825. Can you elaborate a little bit on that?
Absolutely. So the Form 8825, it's basically the business version of the rental Schedule E. And for those who don't know what a rental Schedule E is, it's actually kind of a cool little chart. So it'll have and the same thing for the 8825, it'll have your gross rents and then each category of expenses like taxes, insurance, mortgage interest, depreciation, supplies, repairs, commissions, that whole 9 yards. So it's the breakdown. And so we have a formula because we can actually take, because a lot of people will do, and this is something else to ask your CPA about, but a lot of people, when they purchase a property, will do bonus depreciation because that's a great tool in a lot of cases to save on taxes.
Yeah.
Which is fine. A lot of people get nervous and they're like, well, that's going to give me negative income. How's that going to look? It's fine because we're going to just turn right back around. We add back in depreciation, taxes, mortgage interest, and insurance
Right.
to the formula. So the 8825, it's that same version. And the importance of that form is because there's this really cool guideline where on business returns, instead of counting rental income for specific properties, we have to count the income like we would self-employed, which in that case, it's usually easier than a Schedule C. But we can offset the mortgage payments based on the formulas that we can, if we look at that Form 8825, certain formulas apply there. And if the numbers pan out, then we can offset the mortgage if we were personally liable for the mortgage. So when it comes to debt to income ratio calculations.
Right. Right.
So yeah.
Great.
Yeah. It's a little complicated, but it
Yeah,
works.
right. Hopefully, like when people are viewing this, they don't kind of zone out a little bit. There's
I
a lot
know, yeah.
to taxes and stuff like that, but
I need
all
charts. I
very,
need charts.
yeah,
Yeah.
right, right. You need visuals as well. Yeah,
Yes.
it's very
Yes.
relevant though, and it's all about saving you money, right, and allowing you to
Yeah.
potentially increase your portfolio and all that kind of stuff. So, speaking of which, maybe you can speak a little bit to investing or buying in Florida now. I know with everything that's kind of going on in the country, Florida is actually still a little bit different. We're still a high inbound state, right? We're still
Mhm.
seeing pretty good numbers and days on market and things like that. But as regards to like how much business you're still seeing in the state of Florida and how that might relate to the rest of the country of what we're seeing now.
Sure. Yeah. So I own properties in Florida. I live in Tennessee, but I go back and forth quite a bit. My second homes in Florida are truly my second homes. I spend a
Yeah.
lot of time here. And so what I would say, we recently purchased another property in Florida, and something that's different here, I think, than a lot of other places and even vacation destinations in the country, like take the Smoky Mountains, for example, or I don't know, Sedona, or I think of another good example here, Broken Bow, Oklahoma, right? So a lot of these places are great vacation destinations and people like to go enjoy and leave. Not many people want to live there permanently.
Right.
A lot of these places are pretty remote, which some people like, don't get me wrong, but they're not, that's not maybe the dream destination for people to end up.
Yeah.
Something that I've noticed that's pretty cool about Florida is that a lot of people want to not only vacation here, but they want to live here.
Mhm.
And so just an observation that I've seen tends to be that I think Florida is going to hold its values better because of that, because it's not just based on rental income. So like the Smoky Mountains right now, prices have dropped quite a bit, which is fine. It's not a catastrophe or anything, but
Right.
they've come down more because people only purchase there based on the return on investment. So as mortgage rates go up, the prices have to come down to meet in the middle.
Right.
But in Florida, you've still got the desire, regardless of rental income, because not everybody's purchasing here just for rental income. They want to enjoy and live.
Yeah.
So I think Florida has a lot going for it. Having that diversification of people wanting to be here. So,
Right.
yeah.
Right. It goes back to the quote. I just did a social media post on this yesterday, actually, where it says, live where you want, where you vacation. Right.
Yeah.
And,
Yeah.
I know when we made the move here, that was that every time we came down here and vacation down here, was like, why aren't we living here? And you're seeing
Yeah.
a lot of people, especially after COVID happened and people being able to work remotely, making that move. So, but you're right, the lifestyle here, and people do, you're right. They want not only vacation here, they want to live here too for that
Yeah.
lifestyle effect for sure.
Oh, yeah. We would move here, but my 14-year-old would murder me. So, well, a few more years and we can move down
Yeah,
here.
yeah. So when we moved, I have a 14-year-old too, and he started this year as a freshman. Um,
Okay.
he played football, which actually helped because they were doing practice before school started, so he got to meet some people before school started. So um,
Nice.
yeah. Okay, last thing, maybe elaborate a little bit on what to expect of the process. And you already talked a little bit about what's unique to Florida, but would you say there's anything different about the process here as there would be in Tennessee or anywhere else?
No, I wouldn't say anything different here than anywhere else. I mean, I have to account for higher insurance and taxes,
Right.
but it's all relevant. But not as bad as I thought. We bought one on the Gulf, and I really thought I was like, and I almost we hadn't looked for a long time because I thought, oh my gosh, insurance is going to be so high, but it's actually really reasonable, surprisingly. So
Yeah.
yeah, it's higher than most, but not as high as I thought. So yeah, don't let that stop any of you out there from checking. Look at, get some quotes on insurance if you're
Yeah.
nervous about insurance. And it wasn't nearly as bad as I thought.
Right.
Also flood insurance, I believe well, I know it's transferable because I've done it a couple of times, which is really cool. So,
Yeah.
um, but the process, yes. So my specialty, my superpower is
Mhm.
unconventional situations and getting them into conventional lending, whether it's jumbo or Fannie Freddie loans. And so the process is like any other pre-approval process, but you really want to have a loan officer that knows what they're doing. So most of what we do, probably 95% of what my team and I do, are second home and investment properties. So we know these guidelines inside and out. Very familiar with self-employed, so the process is that, if you do it with me, we would set up a pre-approval call. I'd look through your documents, talk to you about income, and then see what you qualify for. Happy to talk about rates, which rates are kind of in a downward decline right now. We're hoping that stays that way. But we'll go through that process. I urge people not to try to calculate their own debt to income ratios ahead of time because you guys might sell yourself short. Um, or you may overestimate. I've had that too. But more times than not, most people sell themselves short on their debt to income ratio. There's no one way to calculate it. And if you're talking to a bank versus a residential lender, they're looking at numbers differently. So if one person turns you down, talk to somebody else who may know more of what they're doing. I have a client who said, and now we've just financed number 10 for him, but he said, when I first came to you, 20 lenders told me no, and you told me yes. And this was just a conventional loan. It's just that I knew how to look at the rental income pieces of it and put that together. And others just, most loan officers are doing primary homes. So they don't get into all the cool stuff with investments and rentals and that kind of thing. So yeah, but the process, yeah, set up a time with a lender you trust. Let them look at all your documents. Don't be afraid to let them pull credit.
Right.
That imports all the debts. It's not just the score.
Yeah, yeah, yeah.
Yeah.
We're going to elaborate on that in another video with my wife for sure on the whole
Awesome.
credit
Very good.
aspect. We'll have
Good.
to bring you back in because that'll be a fun one. So
That'd be great.
Yeah, absolutely. I know you talked a little bit about your superpower. Is there anything else you want to kind of elaborate on yourself, kind of where you service and that kind of thing as well?
Yeah, absolutely. So I'm licensed in 35 states. I won't bore you with all of those, but they're
Right.
on on the website. There's a little map there that shows so most of the states.
Yeah.
And I'm very excited. So the Scotsman Guide rankings just came out this weekend, and I was number 17 in the entire nation. So
Nice. Yeah.
that was kind of cool. And that was most of that was second home and investment properties.
Yeah.
And so that's just what we love to do. We love to help people start and continue their journey in investing. I've got a passion for it. My team's got a passion for it. So really excited to help people. And I love a challenge. So if anyone comes to me and says, hey, my lender said no, I'm
Yeah.
like, all right, hold my beer.
Yeah, absolutely. Absolutely.
So yeah, so that's what we like to do.
Awesome. Fantastic.
So,
Yeah.
yeah.
We have a passion for it too. And quite honestly, that's one of the original reasons I got into real estate to begin with was for, investment properties and things like that. And I just fell in love with the real estate process. I fell in love with the architecture and real estate in general here, especially in Southwest Florida. So I love being able to not only help people realize the true value of their house, and selling it, but also, people like from my sphere, which is a lot from up north in the Midwest, coming down, finding second homes or investment properties like we talked, and being able to have the connections such as yourself, to be able to lean on and figure that situation out is truly powerful and can definitely help make that a feasible goal for them in life for sure. And I enjoy being able to have a team that is able to help people do that for sure. So, but thank you for being with me today. And we'll have to bring you back on when we do the one with Allie on credit for sure.
Great. Awesome. That sounds right. Thank you for having me. I'm
Yep.
excited to be here. So.
Yeah. Thanks. All right, guys. Have a great day. And until next time.